Hello, my name is Vladimir Tikamirov. I'm Chief Economist at BCS Global Markets, and in this presentation, I'll give my outlook for the coming week on the macro side. First of all, I should note that the past week has not been the usual one. We have seen a big volatility and big developments on global markets, mostly driven by data from US and news from US. The Fed, after its meeting mid last week, significantly lowered its forecast for US GDP growth this year to 6.5% decline and increased its outlook for unemployment rate, more than 9% unemployment this year. These were much weaker estimates than previously. And basically, on the next day after Fed met, U.S. authorities reported a new rise in coronavirus infections. The trend before that has been showing a steady decline in the numbers, but then the numbers started to reverse. Both news, the macro forecast from the Fed and the C virus data had a very negative impact on the markets. We have seen big correction on global markets last Thursday. And this included also oil market and many currencies, including the Russian ruble. Basically, Russian ruble settled last week at the levels at around 70 rubles to the dollar, or roughly about 2 rubles per dollar down from where it started last week. Looking into the coming week, we should say that we actually expect the ruble to continue trading in the band about 70 to 71 rubles to the dollar, which we think is more fundamentally fair value than the previous values we've seen recently, particularly given the weak state of Russian economy, weak state of global economies, and basically very, very soft demand, if any, for many commodities, including oil. So the rise in oil prices was also, in our view, was not very justified. So the correction that we've seen in oil prices, we see it as a fundamentally driven and fair correction. We actually expect oil to continue trading at roughly around $35 per barrel Brent, and ruble in the 70 to 72 rubles to dollar band. The big event of this week for the Russian market and the Russian economy would be the meeting of the central bank. That's a planned meeting scheduled for 19th of June, Friday. Market expectations are that the central bank is going to cut its key rate, which is not surprising given a steady flow of signals from the central bank that they are prepared to ease their monetary policy. The big question is what would be the move, whether they're going to cut by smaller range of 25 or 50 bips, or more aggressively up to 100 bips. I should note that the central bank chief, Nabiullina, on few occasions over the past few weeks, noted that possibility of 100 bips cut is one of the options that the central bank would look into. Depending on the central bank decision, basically, we expect that there could be a rise in capital outflows following the central bank meeting. We have seen very aggressive inflows into the Russian ruble bond market over the past 2 weeks. Many investors were posing themselves for the possible rate cut. They were trying to get use of higher yields that the Russian bonds provided. So if the central bank cuts more aggressively, let's say up to 100 bips, it is very possible that many investors would start fixing profits and could actually start taking money out of Russia, which would increase pressure on the ruble. So we could see increased actual weakness of the ruble after the central bank decision. So that would be the key development for the coming week. Otherwise, basically, we expect correction on global markets in oil and the ruble to continue this week as well, but perhaps at a much smaller pace than we have seen last week. That's all on my side. Thank you.